The following program is brought to you by the Midas Gold Group.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Deno. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals, such as gold, silver, and platinum, to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, welcome. Good to be with you.
Yeah, welcome, Dave. Always good to be with you.
Today, we're revisiting a topic that drew a lot of attention just a few weeks ago. Is inflation temporary? This is part 2. And one of the reasons that we're going back to this is because of a couple of recent headlines. One said Federal Reserve to start withdrawing its emergency support for the economy. The article says the Federal Reserve concluded a pivotal meeting at its rate-setting body with a commitment to leave interest rates near zero, along with an announcement that later this month it will start unwinding one of its biggest and most unprecedented market interventions undertaken in the wake of the pandemic. Wall Street had been waiting for Fed Chairman Jerome Powell's remarks about the stubbornly persistent inflation that is beginning to create interest rate anxiety on Wall Street. In his prepared statement, Powell continued to use the word transitory to characterize the inflationary climate, although he also acknowledged that the supply chain disruption had created sizable price increases in some parts of the economy. Market observers had predicted that Powell would revisit how he characterized the current level of inflation, given that the long duration of higher prices seems to stretch the definition of the term. If this inflation isn't transitory, what is it? Said Zui Ren, managing director and portfolio manager at Penn Mutual Asset Management. I don't know if the word transitory is going to be used as frequently, said Greg McBride, chief financial analyst at Bankrate. The Fed has acknowledged that this could persist longer and at higher levels than they originally expected, he said. Keith Buchanan, portfolio manager at Globalt Investments, said, the more sticky nature of the current investment pressures present a challenge Powell needs to address. And Atlanta Fed President Raphael Bostic went even further, calling the word transitory, in his words, a dirty word, in a virtual speech to the Peterson Institute for International Economics. Bostic said he expected that the supply chain disruptions driving up prices will linger, saying, by this definition, then, the forces are not transitory. And then another headline, food prices vault to highest level in decade. The article says food prices across the world have risen to their highest levels in a decade on the back of tightening supply conditions coupled with robust demand. That according to the Food and Agriculture Organization of the United Nations. The FAO's Food Price Index, which measures world food commodity prices, surged 31.3% in the 12 months through October, a level not seen since July 2011. On a month-over-month basis, the index rose by 3.9 points, or 3.0%, with October's rise representing the third consecutive month of increases. The Labor Department's most recent consumer price inflation report showed that meat, poultry, fish, and eggs were up 8% over the year in August and up 15.7% from prices in August of 2019 before the pandemic. Beef prices jumped 12.2% over the past year, and bacon was up 17%. Food price inflation has also contributed to a run-up in the U.S. consumer expectations for future price increases. The most recent Federal Reserve Bank of New York monthly survey of consumer expectations showed that U.S. households anticipate inflation to be 5.3% next year and 4.2% in 3 years, the highest readings in the history of the series, which dates back to 2013. So that is why we are revisiting the subject, is inflation temporary? This is part 2, and we're talking with Ken Russo from Midas Gold Group. I want to go back to the stability of the dollar and the stability of our income because back over on the political side, we have another federal debt deadline coming up in December. We just went through one of these and we escaped it literally by the skin of our teeth. And what this means is that the federal government could default on its debts. It could actually stop paying people who depend on funds from the government. And that includes people who are Social Security recipients and people who rely on Social Security. Wow, they're on the thin edge financially. And to think that those who are playing politics could actually deny Social Security recipients their monthly check, their income, that's very scary.
Yeah, and very real, Dave. Very, very real. Social Security is a gift that obviously people depend on it. Not to mention that with inflation, they don't know how far their dollar is going to go. So inflation's eating up Social Security payments, although they increased it a little bit. Inflation's eating up income that people count on. So yes, but it's a very real threat. It just goes to show you on how fragile the system is. Washington can't get together. There's two sides. They can't get together on anything. Obviously, the president has agendas that he wants to pass, and they're having a hard time. But they'll eventually, to some degree, get passed. They'll spend money that they don't have, more money, and trillions of more. They're going to try to spend tens of trillions of dollars over the next few years. And they can't even pay their bills into the end of the year without raising debt limits again. It's a mess. It's more of the same. It's kicking the can down the road. It's not a solution. It's not the way how the United States of America, a world superpower, should be acting. It just goes to show you how fragile the system is.
We're talking with Ken Russo, Senior Vice President at Midas Gold Group, and on today's program, our topic again, unfortunately, is inflation isn't temporary. And Ken, as I've said before, that's news we wish we didn't have to hear, but nevertheless, it is true. So let's continue our look at economic information. I mean, the old bromide, knowledge is power, that really proves to be true in this matter. You talk about America being lashed to a central bank economy and what's called fiat currency system. What exactly does that mean?
Jerome Powell and Janet Yellen told me that inflation is temporary. What are you? Oh, well, fiat currency is a currency, paper currency, backed by nothing except debt. Don't forget, at one time, Dave, U.S. dollars used to be backed by gold. So every time you printed money, you used to have a certain amount of gold to back that money. It brought stability to the currency. It brought real value to the currency. But in 1971, they eliminated that. So the dollar, fiat money, is just backed by a promise. The promise of the government to pay. And we all know that this debt of 29 trillion or whatever, pretty much going to be 50 trillion soon, 100 trillion, who knows, tens of trillions are going to be printed. Our money is backed by nothing. Our money is getting weaker and weaker and weaker. Fiat money, based in past histories of superpowers, has always failed. The intrinsic value of fiat money, according to Voltaire, who's a philosopher we talked about many times, is zero. So we should see our purchasing power of our fiat money diminish and get lower and lower and lower. And we're seeing that every day by prices that are rising.
I have a very disturbing image in my mind. In history, I have seen reports and even film of Germany after World War I, when Germany was reconstituted after World War I, and massive inflation hit that country. So much inflation that people literally had wheelbarrows of currency going to just buy a loaf of bread. That the government just kept printing and printing and printing more currency. It devalued the currency to that point. And I kind of shiver when I think that that could happen to our own country.
Yeah, and for people to think that it couldn't is a very bad assumption. If printing money worked, the Weimar Republic in Zimbabwe would be world powers. It does not work. It's created a lot of wealth in the last 30 or 40 years, but it's fake wealth. It's wealth that could disappear very quickly. And this is the message, Dave. If you as an investor have been lucky enough, smart enough to make money in the last 30 or 40 years, protect it, diversify. This is going to end very badly. So take some of that paper money backed by nothing that's been created by debt, trillions, hundreds of trillions of dollars of debt. Some people say quadrillions of dollars of debt. Diversify it into something tangible, something that's been real money for thousands of years. Take some of that paper and move it over into physical gold, and give Midas Gold Group a chance to do that for you. And I know it'll be there when you need it. And that's very important at this particular time.
Thank you, Ken. We're going to talk even more about this as we move along in the program in just a few minutes. But a reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And today our topic is Inflation Isn't Temporary. In a few moments, we're going to take a look at a specific gold product that you can add to your secure wealth.
Sebastian Gorka here. The Biden-Harris administration is governing through an unprecedented number of executive orders. We have a good idea of what their agenda means for the country and for your finances. More debt, more regulations, slower growth, and higher taxes. There's even talk of a digital wallet currency and a so-called Great Reset. With massive new spending programs, the Fed is printing money even faster than before. This will likely cause the dollar to fall and gold prices to rise. That's why it's never been more important to own physical gold and silver, and the dealer I trust to do business with is veteran-owned Midas Gold Group. The experts at Midas Gold can even help you convert a portion of your IRA into physical gold and silver to stabilize your portfolio against the coming storm. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno, and our topic today is that inflation isn't temporary. Oh, by the way, if you live in the Los Angeles or Phoenix area, we encourage you to visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. That's MIDAS, MidasGoldGroup.com. For those of you listening in other cities, you can call us directly, and I hope you'll write this number down and that you will call us at 855-322-GOLD. 855-322-GOLD. By the numbers 855-322-4653. Now, let's change course, and let's look at a specific gold product. And I'm going to kind of put you on the spot here because we're going to get very personal with your own preferences. Do you have a particular gold product that is a real favorite for you?
Well, I love them all in their own different ways, but I got to be honest with you. My favorite is the gold American Eagle. I'm American, proud to be American. We're a veteran-owned company, and the Eagle, in my opinion, is easily the most patriotic coin, most American coin out there, especially when I feel it and look at it. It makes me real proud. I'm proud to be an American and proud to be a patriot, proud to be a conservative. But when you look at the U.S. Mint they produce two coins, the eagle and the buffalo, when it comes to gold. The American Eagle is a 22 karat gold coin, Dave. It came out in the late 80s. It's a mainstay. It's a foundational product that you can own in your possession. You could also own it inside of a gold IRA. The front of the coin has Lady Liberty on it, full length, beautiful, portrait, the same Lady Liberty that was on the St. Gaudens coin back from the pre-33 era. That hasn't changed. The back of the gold eagle just changed this year, as we used to have a soaring flying eagle, and now we have a bald eagle's head. Both beautiful, both a little bit different. But when you say to me, what's my favorite coin? I think about many things. I think about beauty. I think about being a patriot. I think about, our country. I think about our creator and God. And in my opinion, all of these things, wealth preservation, beauty, value, liquidity, all of these things are involved in the 22 karat 1 ounce gold American Eagle. In my opinion, it's a great, beautiful coin of the highest quality. But when it comes to my personal favorite for a bullion product, the gold American Eagle is always at the top of the list.
And you have these available?
Yeah, we do. And if we don't, a lot of stuff we do is pre-ordered. So clients could lock in a price. They can send us the funds by check or wire or IRA transfer or old 401k rollover, and then we can deliver the bars right to them. If it's not immediately, it's within a week. So gold at this particular moment, Dave, is still available. Remember, you can't print gold out of thin air. So someday this won't be available. Gold will be hard to come by, or it'll only be available at such sky high prices as inflation will eventually affect the gold price. And we feel that means a much higher gold price in the future. And yes, it is available. And we would encourage people to own gold today. If they do own it, add to their gold. And the Credit Suisse Gold Bar is an excellent product to consider.
You're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is Inflation Isn't Temporary, and we're going to continue in just a moment.
Dr. Sebastian Gorka here. Part of the so-called Great Reset from the multinational elite is to enact a digital wallet currency. Think of the implications. Time to create your own gold standard with a call to the dealer I do business with, veteran-owned Midas Gold Group, the America First precious metals experts who can help you with IRAs and more. Get your portfolio reset with gold and silver. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
We continue now with The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno, and if you live in the Los Angeles or Phoenix area, we talk about this often, but it is because we really would love to see you come and visit us in our local office and meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. For those of you listening in other cities, you can call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. We're talking, as I said, with Ken Russo. He's a senior vice president at Midas Gold Group. And on today's program, our topic is Inflation Isn't Temporary. Ken, what do I do with my gold if the dollar collapses?
Well, it's something that will at least hold your purchasing power, and gold has always been convertible into any currency. So what I would say is you need a war chest to preserve that wealth that you do have for future generations. We'll have to see what we're going to do with our gold. I mean, we may want to sell it if it goes up. I mean, some people think that gold could be $10,000-$50,000 an ounce in the next few years, and it's right now around $1,800 per ounce. So that's a huge upside. I would tell people that shouldn't be the reason why they're buying it, but that is possible. So we may want to cash it out or cash a little of it out. Some people may need money to live on, so they may need to sell a little. And obviously, we're a buyer of gold and silver and platinum every day too, as well as as a dealer for our clients, so we are a buyer as well. I don't know what money's going to look like. Nobody knows. I mean, the crystal ball is not on today, but what I would tell you is that no intelligent, smart investor speculates with 100% of their money. Speculation, Dave, we've talked about many times, could make you rich, and it also could put you in the poorhouse and bankrupt you. Gold keeps you rich. It holds its value. So I would tell you that in such a time of speculation, a lot of app trading, stock trading. I mean, Tesla has over a $1 trillion market cap right now, but there's another side of that. The ski slope only lasts for so long before it starts to come down the other side. And not everybody wants to take that ride down the other side. So if you don't, those decisions have to be made now. Diversify, take some of your risk off the table, and move some of those risky paper assets into physical gold that you could hold on to.
Our topic today is inflation is not temporary, and it's a second time we've come and visited this topic. Do you think that there is anything that can be done that can stop what looks to be accelerating inflation right now?
Well, we may go through a temporary phase where the rate of inflation slows down a little bit, but we're not going to go down to prices anywhere near where we were, 2 or 3 years ago anytime soon. I mean, how delusional do you have to be to think that is going to happen? I mean, there's problems in every aspect of what's going on. Problems at the port, problems in supply chain, problems with labor, problems with trucking. I mean, there's just loads of it's a mess. And don't forget, this is a very complicated system that is now upside down. It's not going to change anytime soon. So I think it's going to get much worse, than where we are right now. We could enter a hyperinflationary period. I don't know. Like I said, it's hard to think that it's going to get any better. Look at who's pulling the strings and who's calling the shots. And in my opinion, it's going to get worse because we have people in charge that have no idea what to do, no experience on situations like this, and it's not going to end well. Now, I hope it ends well. I hope this country becomes one of the strongest again, but in my opinion, it's headed in the wrong direction in every single way you can think of. So the least that I can do is protect some of my money as well as other things. There's a lot of serious things going on, but we're just talking about money, Dave. Protect some of your money, put it in something that's a proven purchasing power product. Hold your buying power. I don't think there'll even be $1 in the next few years, and the financial system as we know it will not exist as it does today.
And that is going to bring us to the end of our time together here on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. Midas Gold Group is proud to be America's #1 veteran-owned gold dealer supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future, and I love reminding you of this each and every week, your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you so much again for your time today.
Yeah, it's been a pleasure, Dave, as always. I'll talk to you real soon.
Okay, I'm Dave Deno, and I hope you'll join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.